the government has made a small commitment to look into doing something for venture capital in its latest budget. It will review incentives and establishing a service for foreign investment. But there is much more needed, and to tell us what it is Cathy Lyall from Seed Space. Hi, Cathy.
Hi, Elliot. Hi, Simon.
Great to have you on again, Cathy. So give us your take. How did you see the budget and the opportunities for venture capitalists?
Yeah, look, I'll start by being positive. We welcome the commitment for doing more as far as VCs. They've flagged, and which they had already done recently, that they were going to review the ESVCP and VCLP programs. But there's just still so much for us to do here. I completely agree with what you were talking about with your previous speaker there, Jack. We are so behind the global tech hubs, our peers in the UK, in Singapore, in Europe, and in the US, and there's just so much we need to do around policy, around investments, around really targeted programs that are aimed at rebuilding, and I'm saying not just building and rebuilding, investment momentum here in Australia. We want to be able to support these business growth opportunities for fintech. And all of those lead to job creation. All of those lead to supporting female founders. There's a whole raft of things that are benefits that come out of this. And yes, I just say we're encouraged that they're looking at it, but we're just very disappointed that there weren't more concrete plans to move things forward in last night's budget.
And Cathy, with the concrete plans, it's not as though we're going it alone. There's other countries such as, Singapore, or there's London, that are really pushing things out there in the space. So why aren't we looking more towards them and benchmarking ourselves against people we do consider global peers?
It's a really good question, Elliot, and it's something we've been really banging on about quite a lot in the last year or so. I mean, I spent the last 18 years in London. I came back to Oz in 2019, and I was quite surprised to see how far we lagged in many ways our peers overseas as far as the evolution of the fintech ecosystem. It's quite disaggregated. We don't have a strong angel investment ecosystem here, and that's really crucial to supporting early stage companies. Our early stage VCs don't have the incentives. Our sovereign wealth fund isn't engaged. It's a whole raft of things that we just haven't benchmarked ourselves against. And from a holistic perspective, the government isn't looking at all these various areas where, for instance, in the UK, they've spent 8 years or 10 years doing, and now the dollars that the fintech sector, the innovation economy drives into the UK economy it's been a substantial percentage of GDP, and it's really been a saviour, with COVID and post GFC. So we need to be benchmarking ourselves against our peers. We can do it in a really rigorous and structured way. We've certainly put data into the Senate inquiries and the Commission, and we're lobbying senators so that they understand what this is. And I think benchmarking ourselves and then looking to harmonise is something that we really should be doing, and I can talk about that in a minute.
Well, look, you brought up the Future Fund there, the sovereign fund. I think it's worth about $226 billion at this point in time, so it's a pretty sizable war chest. How do you think that capital should be deployed? I mean, they're doing a bunch of bets, but mostly they're pretty safe ones. We're talking about risk here. Should the government be risking sort of, I suppose, our national superannuation and taxpayer funds like that?
Yes, is the short answer, because if you look at our peers internationally, every single fintech ecosystem has the support of the domestic sovereign wealth fund, without exception. And without exception, there's been great returns for those sovereign wealth funds in that. So the Future Fund here in Australia does deploy capital to 14 funds. The problem is 0 of those funds are Australian, and none of those 14 international funds actually invest in the Australian early stage ecosystem. It's just deplorable, and it's very bewildering sitting here seeing that this is the case, and that's a trigger the government can pull. It's a lever it can pull immediately that doesn't have any cost to the budget, but would have a massive impact on the early stage ecosystem here. Imagine if 0.5%, half of 1% of that 226 billion was deployed to our ecosystem. It'd be really significant.
Oh, especially when it's being run by the former Treasurer, Peter Costello, the last person in charge of the Treasury to produce a budget surplus. So maybe he could get an even bigger one doing that.
Exactly. There's a few other things that I think we would like to see as well. As far as incentives for investors and for startups and for the founders that start them up. And these are really tried and true programs that have worked really well in Singapore, in the UK, in Europe and elsewhere in the world. we would have to more than double our current tax concessions, more than double, to meet the lowest one available for investors in the UK right now. So we really are a long, long way behind. And to put us on an equal footing, we've got a lot of work to do around company incentives and around founder incentives to go out and be entrepreneurial and innovative. You've already talked about the R&D tax grants previously, so I won't touch on that. But there's just so much from a holistic perspective we should be doing that would really support founders, and as I said earlier, female founders as well. And our international investors that are looking overseas to deploy their capital, Australia is definitely on the list. We're getting some international investment, but it's despite these programs, not because of. And if we could unlock some of these programs and incentives here in Australia in a really meaningful way, not in a half-hearted way, but in a really meaningful way, it will we'll very quickly see Australia become a serious target for international investors too.
Now, Cathy, of course, the tech industry is all about not just complaining, but getting on the ground and doing something about it. What can we do as a sector to not only get more investment from the government, but make the most of the budget that has been delivered?
Yeah, it's a tricky question. So I think most of the things that came out in the budget last night, we already knew were coming. And most of those have come out of the very detailed inquiries the Senate's been running, and there's been really detailed and deep submissions supplied back. There's a real engagement there, that's for sure. And Senator Bragg, the Prime Minister, indeed, have spoken frequently over and over again about their desire for Australia to be a leader, an innovator, and a fintech hub for the region. So from the perspective of opening up the Sovereign Wealth Fund, allowing fintech VCLPs, like seed spaces and VCLPs, to actually invest in financial services, because at the moment we're banned from doing that. It's a really simple amendment to a policy that had an unintended consequence of cutting us out from being able to invest in these early stage things. So for instance, as a fund, we couldn't invest in neobanks or any of the payments stuff that's come out in the last 3, 4, 5 years. And imagine if we could have deployed some of that capital to accelerate some of those going forward. And so we need to do some real policy change. And we'd like to see that happening ASAP, because we can't wait another year to do this. I heard you talking to the previous speaker, and we're not just going to fall behind, we're already behind. We just don't want us to drop off the ledge.
All right, well, Cathy Lyall from Seed Space. Anthony Albanese, the opposition leader, will give his budget reply on Thursday. Maybe you should give him a buzz now, give him the roadmap and see if he can get into Labor policy, because we've got an election coming up. Thanks for your time on Startup Daily today.
Thanks, guys. Bye.